Should you pay taxes with a credit card? Hi, it's Amanda here. I get this question a lot, right? Should I pay my IRS taxes with a credit card? On the surface, it sounds tempting, right? All those points, miles, cashback. But here's the catch. The IRS doesn't let you pay with a credit card for free. There are convenience fees, and depending on your situation, paying taxes with a credit card could either be a smart financial move or a very costly mistake. And today I'm gonna break it all down, right? I'm gonna talk about how much does it actually cost, when it might make sense to do it, when it does not make sense to do it, and the tax angle that most people don't think about. So let's start with what does it cost, and let's look at the fees. The IRS doesn't charge them directly, third-party processors do. As of right now, here are some of the official rates that we see. Pay1040.com charges 1.75% of your payment with the $2.50 minimum. Then we have ACI Payments Inc., who charges 1.85% and also with a $2.50 minimum. And if you pay through tax software like TurboTax or H&R Block, the fees can run as high as 2.95%. So if you owe $10,000 in taxes, a 1.75% fee means you'll pay an extra $175 just to use your card. But let's talk about when it could make sense, right? Or why would anybody do this? Well, here are a few situations where this might make sense to pay your tax bill by credit card. The first thing is, are there sign-up bonuses? Let's say your credit card is offering 100,000 points if you spend $10,000 in the first 3 months. Well, paying your tax bill with that credit card could potentially get you that bonus instantly. And if those points are worth more than the processing fee, then you could come out ahead. Another reason to potentially consider this is if 0% intro APR offers are available. Some people use their card at 0% interest period as a short-term loan. This can give you time to pay down the balance without penalties and additional costs. But you just have to be careful to pay it off before the promo ends. And for real estate investors, we kind of look at this as what's the highest and best use of money, right? If I'm able to delay the payment of this and otherwise use that money to operate my rental properties or pay down other loans that are at even higher interest rates, that's where it could make sense. The third reason why people might want to do so is cash flow management. For certain business owners, putting their tax bill on a card could help smooth cash flow while waiting for income to come in, so similar to the real estate example I just gave. Now let's talk about when it could be a bad idea. And let's face it, for many people, paying taxes with a credit card is just a bad financial move. If your card earns 1.2% cashback and you're paying at a 1.75 fee, you're basically coming out in the negative and losing money, right? So that's a situation where this might not make sense, right? Or if you carry a balance and paying high interest rates on that, that will quickly outweigh any rewards. So the goal is try to not carry a balance when you're factoring in the cost of the interest. And if you're already tight on cash, this also can create a debt spiral instead of solving your tax problem. So again, if you're going to use credit card to pay, make sure you have a solid plan on how you're going to pay off or pay down this debt. So in addition to the pros and cons of using credit card to pay for your tax bill, here is a tax angle that many people don't realize, is that the processing fee itself could potentially be tax deductible in certain instances. If you're a business owner and you're paying business taxes, the convenience fee is generally tax deductible as a business expense. So while you're not escaping the fee totally, you might at least get a partial tax break for it. So keep that in mind when you're deciding whether to pay with a credit card or not. So to wrap things up, should you pay your taxes with a credit card? The things that we're considering is, are you chasing a valuable sign-up bonus? Are you able to strategically manage cash flow? Or are we maybe looking at a 0% offer that we can use responsibly? If so, that might make sense. But if you are just hoping to rack up some points to cover a tax bill that you can't afford, or if the cost of paying with the card is higher than the points or benefits you're getting from the additional fees, then usually it makes sense to skip using credit cards to pay for your taxes. The IRS collects about $5 trillion a year in taxes, and at the end of the day, paying them by credit card won't really change the amount you owe, right? You're gonna owe the same amount either way. It just shifts how you pay for it. So be strategic, make sure you weigh the cost and the benefit, and most importantly, don't get stuck in paying more than you have to. If you found this breakdown helpful, subscribe for more tax tips and be sure to grab my free tax savings toolkit in the description below.